Hello, this is Jordan. This video is being recorded on the afternoon of Friday, July 12th, 2024. Thank you so much for tuning in. Hope you all had a great week. And if you are an investor in gold and silver, and in particular, the mining stocks or the juniors, you did have a great week. So we had gold up about 1% for the week, about $23 an ounce. Silver was actually down, but you look at GDX, GDXJ, both gaining more than 5% for the week. And the silver stocks, SIL, SILJ, the silver stock ETFs, those were up over 7%. And folks, this is very, very powerful. When you're early in a new bull market in precious metals, it's typically after the very beginning that you start to see the miners lead the way. And that's exactly what we've seen, or I should say what we are seeing right now. Like in the last 5 or 10 days, we are seeing the process of the mining stocks really start to lead and anticipate those next leg higher. So let me get right into the video and we'll look at the charts. And so starting off, we really need to start off with the miners because they are really the fulcrum of what's driving things right now. And so in this chart, we have gold here, GDX divided by gold, GDXJ divided by gold, and then this is GDXJ divided by GDX. So we're looking at the larger juniors. Again, that's what GDXJ is. We're talking about juniors that are around $1 billion in market cap. They're the senior juniors, as Bob Hoy coined it. So those against GDX and the largest stocks, Newmont's, Agnico Eagle, Franco-Nevada, those types of companies. So the larger juniors against the seniors. I just love this ratio chart here. Look at it. It's failing at the 200-day, bumping up against it, failing. And then we get to this year. It moves above it, or I guess that was late last year, moves above it. And then earlier this year, it's holding it before we had the big move in gold. So here we had the big breakout in gold. And this is up. Pull back to the 200-day. Another move up, down during the correction. So I think look for this over the coming days and weeks. It could move up like that. But anyway, this is a very good sign for the sector when you see that, as is the fact that the stocks are breaking out against gold. So this is GDX against gold. So this, in the last couple of days, this is broken out. I think this is an 11-month high. It's not quite a 52-week high. So that's a breakout there. This is GDXJ against gold. And so this is actually a positive divergence because this right here is a higher high. This is a lower high. So, and of course, we see that because here we see that GDXJ has been outperforming GDX. So this close here for GDXJ divided by gold, this is actually a new 52-week high for this ratio. And I mentioned in my other video, look at the arrows here. I mean, these in the last month or so held the 200-day, two tests right here, holding the 200-day. Then it moves up. So we have the higher high here. And in the last, I should say in the very short term, this is a higher high compared to this. This is a higher high compared to this and the May high. So the July high higher than the May high. What do we have here? I mean, gold's moved up, but this is still lower than this. So this is another positive divergence. So this is what we really like to see. Just quite simply, the miners are leading gold. And one more thing, keep in mind, I mentioned it in the past video and even in recent weeks, the advanced decline line. The advanced decline line last week made a new 52-week high for the first time in 4 years. So that's really significant. So we are going to see the miners continue to lead this move, in my opinion. So here's a short-term look at the miners. It looks like the very short-term targets are these highs, basically. So we're looking at GDX here. It closed at 38, so this is at 40. And it doesn't necessarily have to stop at 40. We'll look at the weekly and monthly charts in another video. We'll do that in the premium update. But this is the next target. It could hit this in the next week or two. Same thing for GDXJ. Close at 47.5. 50 is the next resistance. As far as SILJ, the next resistance looks to be, I'll call it 14.5 or so. So things are looking really good for the miners now. And this is just a short-term look. We'll look at the weekly and monthly charts to get a better look. And if I can just pause for a second, consider our premium service. Go to thedailygold.com/premium. You get major update every weekend. All these things are in the update, my top 10 company table, watch list company table. I mean, this, you don't have to read 100-page or 5, 10, 20-page reports. to see immediately the things that I own in my favorite companies. You can look at these company tables that have a lot of information. And actually, you can, as soon as you sign up, you can see, you could download from the website number 888. It's about update from 3 weeks ago, where in the table I assessed, okay, what's the upside for the top 12 companies we own? How much upside does this company have at 3,000 or 4,000 gold or $50 silver? How much upside might it have if silver breaks $50? And these are also some teasers as far as what I covered. So in the premium service, I'm spending more time, well, I should say most of the time, covering the stocks, because we know we're in a bull market. And at that point, you know that stock picking becomes really, really important, more so than market timing. But anyway, let's finish it off with the metals here. And so gold is consolidating bullishly. This is not a typical flag, but it is kind of building a flag. And there's lots of measured upside targets here. You can take this. This is about $100 and move that forward to project. But you also have this, which is, so that comes in 2150. So that's almost $300. So this gives you potential flag target of 2750 or 2730 or so. There's a Fibonacci target also in there. But I don't know, because this could be the flag. This could actually be the flag. This, you move here, this $450 move, and not just this right here. So if this is the flag, you add 450 from here, that gets you to 2900. In the cup and handle, measured upside target initially is 3000. And by the way, people, remember the log target. In my experience looking at these patterns, the log target, or the markets that had the cup and handle breakouts, they went from the measured upside target to the log target 6 to 12 months. So if gold's going to hit 3,000 in the coming months, project 6 to 12 months. On top of that, that could potentially give you 4,000. Okay, for silver, I mentioned this in another video. I really like the action here, because we know that 29, it was very stiff resistance here. It broke this resistance at 26, retested here, then boom, broke 29, came back, retested 29 twice. Boom, boom, mini double bottom there. So this is going to be strong support, 29 now. And who knows, maybe this will consolidate a little while. We see that gold, this isn't completely broken down yet in favor of silver, but whether this consolidates for a couple weeks or a month or not, the next target is going to be 34.35, the measured upside target from this rough inverse head and shoulders breakout. So 34.35, that's what we're looking for silver. And here are the weekly charts, and not a lot different. I mean, this actually does a better picture of painting it than the daily chart. You see the resistance here at 29, never closed above 29 here, but tried many times. And here we see, gets to 29, the pullback breakout, then a couple tests here, and now it's at a higher level. And so once silver chews through the supply in the low 30s, maybe it gets to 34.35. Gold, you can see this, again, this is setting up to be a bullish flag pattern. So things are looking good. That's where we are. And hey, we're in a bull market, and we had a consolidation and a pullback. It's still ongoing in gold and silver, but the fact that the miners are leading, the miners versus the metals are breaking out, just very, very strong performance from the miners and juniors over the last 6 or 7 trading days. And this is what happens when you're early in a bull market. I remember in 2009, go back to 2008, we had the October 2008 bottom, gold bottoms at 700, runs up to 1,000 really quickly in February. But gold then consolidated for 5 or 6 months before it broke 1,000. During that consolidation period, the miners and the juniors were making higher highs. Like, they were already making higher highs before gold had its next breakout. And something similar happened in the early 2000s, 2002, 2003. I think we are starting to see at least a repeat of that. So things are looking really good for the precious metal sector right now. That's all. Hope you had a great week. I hope you have a great weekend. Leave a comment. Let me know what you think. And thank you so much for tuning in, and I'll talk to you guys again in the next video.